Thinking about your 2026 Palm Bay property tax bill? If you're a new homeowner or if you've seen your home value shoot up, you might be in for a surprise. But what does all the political noise about millage rates and budgets actually mean for a $300,000 home versus a $500,000 home? Let's cut through all the confusing jargon. I'm gonna break down the actual numbers so you can see an estimated impact on your wallet. Most of us see that trim notice in the mail and our eyes instantly just glaze over it. It's like getting a bill from a restaurant before you've even ordered, showing you all the confusing menu prices. It's a wall of numbers and weird words like ad valorem, and it's easy to just file it away. But as we all know, hope isn't a financial strategy. The city is growing, and with that comes the need for more services, especially public safety. And that money has to come from somewhere. Your property tax bill. Ignoring this today is like ignoring a check engine light. It could lead to a major unexpected hike in your monthly housing costs. In this economy, who can afford that? My name is Stephen Thomas, and as your local real estate professional here on the Space Coast, I'm in the trenches with homeowners every single day. I see the anxiety that comes with rising home values and the threat of higher taxes. People are genuinely worried about being priced out of their own homes. And honestly, they're right to pay close attention, because while a rising home value feels great on paper, it also has a very real consequence, like a shadow that grows with it, a higher tax bill. Now let's be clear. The tax rates of 2026 are still being finalized. The city and county hold budget hearings to lock in those numbers, but the trends are already pointing upward. For the current 2025-2026 fiscal year, Brevard County's aggregate millage rate was announced as 5.43% higher than the rollback rate. That's the rate that would have kept revenue the same as the previous year. This is a clear signal that the cost of running our county is going up, and that bill trickles down to you. The biggest shock, however, often comes for new buyers. It's like finding out the previous owner of your car had a special low interest rate that doesn't transfer to you. You see a neighbor paying one amount in taxes, but when you buy a similar house, your bill is thousands of dollars higher. This isn't a mistake, it's how the system is designed. And the difference between being prepared and being panicked is understanding how it works. That lack of knowledge can cost you. So today, we're gonna turn on the lights. And if you're feeling that anxiety right now and wanna talk through your specific situation, click the link in the description to book a free personal consultation with yours truly. Treat yourself, don't cheat yourself. Now, before we run any numbers, you need to understand 3 key terms the tax man loves to use. Forget the government definitions. Here's the coffee shop explanation. First, we have the assessed value. Think of this like the sticker price on a car. It's the official starting number the county property appraiser puts on your home for tax purposes only. When you buy a home, this value is generally set to the new market value. Second, we have taxable value. This is the number that really matters. If assessed value is the car sticker's price, taxable value is what you actually pay after all of your coupons and rebates are applied. It's your assessed value minus any exemptions you qualify for. This is the lower discounted number the government actually uses to figure out your bill. And third, which is the most confusing one, the millage rate. Imagine your tax bill is a pizza. The millage rate is the recipe. The city, the county, and the school board each add a topping, their own slice of the rate to be exact. And all of those slices get baked together to create your total millage rate. To put it simply, a mill is just $1 in tax for every $1,000 of your home's taxable value. So if your total rate is 12 mills on a $200,000 taxable value, your tax bill will be about $2,400. To make it simpler for our estimates today, we'll use the effective tax rate. This is just a simple percentage, a rule of thumb that gives you the close estimate based on your home's market value. Palm Bay's median effective rate is about 1%, but keep in mind, this is just a starting point. Okay, let's get to the heart of it. We're gonna use that 1% Palm Bay effective tax rate as a simple estimate. More importantly, we're gonna look at these case studies through the eyes of a new buyer to show how the tax reset at the time of the sale can actually have a huge impact on your wallet. Let's just say you just bought a classic starter home in Palm Bay for about $250,000. It's the backbone of our community. Using our 1% effective rate, your estimated annual property tax bill will be around $2,500. That's about $208 a month. Now, here's the shocker. The previous owner who lived there for 15 years with a homestead exemption might have only been paying $1,500 a month. Why, you ask? Because their tax assessment was locked into a loyalty program that you don't necessarily inherit. When you bought it, the assessment reset to the sales price, creating a $1,000 tax increase overnight. That's a huge jump that catches many new owners by surprise. Now, Let's look at a $350,000 home, maybe in one of the newer communities. This is where many growing families find themselves. So when it comes to the math, $350,000 times that 1% rate gives us an estimated annual tax value of $3,500, or about $292 a month. That long-time owner who just sold it might have had their assessed value capped at $220,000, giving them a tax bill of around $2,200. When you buy it, that protection is wiped out. Your new bill reflects a $1,300 annual increase compared to what the seller was paying. To put it in perspective, that's an extra $108 a month. Money that could have gone to groceries or kids' activities. Let's move to a $450,000 property. A newer construction home, perhaps with modern amenities. The calculation, 450,000 times 1% is an estimated annual tax of $4,500 or $375 a month. But the person you bought it from, thanks to their long-term homestead exemption, could have been paying a tax on an assessed value of just $300,000. Their bill was closer to $3,000. For you, the new owner, that's a $1,500 annual increase. This is where you really start to feel that squeeze and wonder what happened. Now, if these numbers are making your head spin and you want a personalized estimate, especially for a home you're considering, my team and I are here to help. Just click the link in the description below to book a call with yours truly. Treat yourself, don't cheat yourself. Now that you see the potential damage, let's talk about the defense. Your number one tool for lowering your tax bill is getting your exemptions. The undisputed champion is the Florida Homestead Exemption. If you own your property and it is your permanent residence as of January 1st, you definitely need this. It can reduce your home's taxable value by up to $50,000. This alone can save you hundreds a year. For those who are wondering, you must apply online by March 1st on the Brevard County Property Appraiser's website. But the real power of the Homestead Exemption is to save our homes cap. It's like putting rent control on your property taxes. Once you have this exemption, the property appraiser cannot increase your home's assessed value by at least more than 3% per year, or the rate of inflation, whichever is lower. This is your shield against a hot real estate market. Even if home prices in your neighborhood jumps to about 20%, your tax assessment can only go up by the small capped amount. This is without a doubt the single most powerful tax-saving tool a Florida homeowner has. There are also some potentially revolutionary proposals being debated in the Florida legislature for 2026. One proposal is HJR 203. This aims to phase out non-school property taxes over 10 years by increasing the homestead exemption. Think of these like an architectural blueprint for a massive tax relief renovation. The plans look exciting, but they still need to be approved by voters before construction can even start. Still, they show a clear desire in Tallahassee for major property tax relief. So, what can you do right now? Don't just wait for the bill to show up, be proactive. First, and I cannot say this enough, go to the Brevard County Property Appraiser's website. It's bcpao.us. Check your exemptions. Did you apply for the homestead exemption before the March 1st deadline? Are you a veteran, a widow, or a senior on a limited income? There are other exemptions you might qualify for. Make sure you're claiming every single dollar in savings you're entitled to. Second, keep an eye on the city's budget meetings. They are public. You have the right to attend and even speak up. The decisions made there about millage rates and funding priorities will directly affect your wallet. Third, when you get your trim notice in August, don't just toss it, open it and read it. Does the assessed value seem fair compared to similar homes? If you think it's too high, you have the right to appeal. The instructions are on the notice in the appraiser's website. Finally, if this all feels overwhelming and you just need to know what this means for you, this is exactly what I do. My team and I help people navigate this stuff every single day, so you're gonna wanna click the link in the description below to schedule a free, no obligation call with yours truly. We can help you make a plan that works. So treat yourself, don't cheat yourself. Look, property taxes in Florida in general can be complex and frustrating, but being informed and prepared is the key to navigating them. The values might be trending up, but you have powerful tools and potential backup coming from the state to help you fight back and save your money. The biggest mistake you can make is ignoring it. By understanding how the system works, checking your exemptions, and staying engaged, you can take back control. Now that you know how to estimate your 2026 taxes, the next step is simply mastering the number one defense. Thank you guys so much for watching. If you don't mind just simply liking and subscribing, especially if you're new to the channel, and go ahead and share to anyone who may need this information. Listen, if you ever step into the Brevard County area, treat yourself, don't cheat yourself. Give me a call with the link in the description below. And as always, Thank you guys for watching, and I'll see you in the next video.